My view is that we're still paying for the effects of COVID that cause all sorts of problems. Like nobody could manufacture anything, nobody could ship anything, planes couldn't go anywhere. And so as COVID started to ease, people came back out of their houses, back into the office, back to consuming things, and there were no goods to be bought because all the shelves were empty because nothing got manufactured. So that caused this huge rise in inflation. Then the next thing, the central banks think, oh my God, it's inflation, because inflation's pretty bad because most people's wages haven't gone up as much as prices have. So everyone feels poorer. So the central banks think, God, we need to do something about this. So that's the Federal Reserve and the Bank of England and all these guys, and they raise interest rates. And that usually slows down the economy. And it has. The economy is actually falling off a cliff because they probably over-tightened. So even though we kind of know things are bad, the forward-looking stuff that I look at using my kind of macro framework suggests things are going to get really quite ugly over the next 6 to 9 months. So crypto is a function of two things: technological adoption and the macro, the liquidity that the central banks are providing. Those two things are the key drivers. So if you zoom out of a log chart of crypto that everybody always tells you to do, you can basically see things like Bitcoin go up, just up over time, and up a lot. But it's very volatile. You get these kind of big ups and downs. So the question is what drives the big up, and then what drives the ups and downs? The big up is driven by the adoption of technology. There's now 300 million people using cryptocurrencies or investing in cryptocurrencies. It's growing at about 100% a year or so. It's the fastest adoption of any technology the world has ever seen. So people are adopting this twice the speed of the internet. That's why it's been so profitable, but it's also very volatile. So if everybody's feeling the pinch, it's not going to drive up the price. But once this situation eases, it'll start driving up the price. Now, there's another piece of magic that happens with crypto, is crypto doesn't do well in inflation because of the reasons I said. But when the central banks start printing more dollars or euros or pounds or yen or whatever it is, that's called debasement of the currency, quantitative easing. And that is when crypto does really well. So one of the reasons I've been very closely following the prices in crypto recently is because as we start getting a worse and worse economy, we know eventually rate rises will give way to rate cuts. Quantitative tightening will go to quantitative easing, and those conditions are literally perfect for cryptocurrencies. So crypto breaks down to a whole bunch of different things. So you've got at one level with Bitcoin, which is like an asset that the central banks and the governments can't mess around with. Okay, so therefore, over time, it should maintain its value. Now, it's very volatile still because it's still early in its adoption. But it was the advent of Ethereum and the smart contract that was the big game changer. Because almost everything we do, including me coming on this podcast, is a contract. And they're mainly unique contracts. Everything, whether you buy a ticket for something, whether you go somewhere, almost all human activity is some form of contract. Now those can go on blockchain and be recorded. So before, if you buy a car, you have to go to the center and register it and do all of this stuff. It's a pain in the ass. But what happens is on blockchain, it can be authenticated by a distributed network of people, which means it's more secure in terms of who confirms that contract exists, and therefore it can be policed. What we can do is put our identity on the blockchain, and we can even hide the details, but have a proof of the identity. And that allows us to operate in a digital world as we move in towards the metaverse that separates the humans from the bots. Now, also the other thing, if you think about, we got very much taken advantage of by the big Web 2 platforms, Google, Facebook, others. And they monetized us while we used their products. But they monetized us in a way that was quite egregious because they gave away our identity and sold it to others. So people monetize us. But once you've got your own identity, you can decide who can monetize you and who not. and how much of the economics you want to share with them.
Mm-hmm.
So it's going to create a very big difference in the web. And we need this kind of stuff, all of this, for where the web is going, because it's moving so fast. Well, there's a piece of magic, and I alluded to it earlier. We know that the adoption is going up, and the adoption of a network drives up price. It's called Metcalfe's law. So here we are at the most oversold levels almost in history of crypto. Yes, the price move has not been as big as it was in earlier stages, but the levels of how oversold it is are enormous. So here we are looking at this saying, okay, it's been driven by the macro, it's been driven by the central banks, liquidity, inflation. And our job is to look forward the next 2 years, 3 years, 5 years, and say, is this current state of affairs going to be permanent or temporary? Well, the history of economies is the business cycle goes up and down. It's cyclical. So therefore, with the cheap levels, we're kind of at key trend lines. And almost every time we get here, the crypto market 10 or 20 X's from here. Now, that's not a guarantee that it does it next time. So we saw that China bans it. Market goes down a bit, then nothing happens. India bans it, unbans it, bans it again. Nothing really happens. So it's actually difficult to think what is the existential threat now. Well, the one threat people say is, well, if the global internet is turned off. But again, that's a distributed network. And with Elon Musk's Starlink, it's actually harder to do because these networks of phones and data are now not in sovereign states. They're in space. So it actually becomes really hard to do. So I don't see the existential threat. You can have threats like the US regulates it, tells everybody Bitcoin is bad, you're not allowed to own it, much like they banned gold in the 1930s. It didn't stop gold being an asset. Because when you go from one person to 50, that's a 50x increase. When you go from 50 to 100, it's a doubling. Right? So that's what drives the value of these things. So I was very, very bullish Ethereum, and I still am. It's still the majority of my investments. But Solana, I noticed that a fast blockchain is going to capture different use cases where we really need speed and cheapness. And Solana also has been focused on the kind of mass adoption stuff. So they got NFTs and they did quite well from NFTs, but I see conversations that they have and what they're working on. You know, these are the guys who built a phone. So they're thinking of consumer adoption. Well, other chains like Avalanche might be looking at financial system adoption. And then you think, okay, is Bitcoin going to capture this or not? Or do I need to buy more things? So my suggestion has always been Bitcoin is this kind of safe asset, this kind of OG. Ethereum is the best manifestation that we have today of the broader Web3 big idea. Maybe a balance between those two is a pretty straightforward way to start. Then once you've got a wallet and you see these things go up and down or in your PayPal account, you'll get a feeling for how does the volatility make me feel? Does it make me feel sick when it falls 50%? Because it will. Do I feel too elated and think I'm a god when it goes up 10x? You will. And you have to learn to manage your emotions, think about how I want to add to my investments when I want to take money off the table because I can use it for other things. But that's where I'd start.